have with us Vijay Valecha, Chief Investment Officer at Century Financial, to talk more about this. Welcome with us, Vijay. First of all, let us start talking about how many phone calls are you receiving every day as asking you if they buy the gold or not?
It's been that way for the last 2 years. Everybody's asking only about gold. It seems to be the only instrument that people are interested in is gold these days. Thank you so much for calling me today. I've been saying that gold will touch 4,000 since the start of the year, and honestly, the rally is so strong that it doesn't look like that gold is even started yet. It feels the rally has got much more legs. I feel we'll easily see 5,000 also probably in the next 6 months. So the rally is very strong. We're getting a lot of calls. There's a lot of demand for gold. It's absolutely on the street. It's everywhere. I mean, gold is just shining.
Here, of course, we're talking about the gold shining very strongly. It reached $4,000, and this perhaps warns us that we need some correction, because the continuity with the increase in these gains perhaps will lead to a stronger correction, deeper one. So do you prefer the correction to take place now better than it gets a correction deeper at a higher level?
Well, absolutely. Any rally which is almost 40% that we have 50% that we have seen this year without a correction is very unhealthy. And especially we have seen gold defying all our previous correlations. When the dollar falls down, gold has moved up. Last year when the dollar was moving up, gold was moving up. Equities have moved up along with the gold prices. So gold is actually breaking all correlations also while it's moving upwards. And that is actually quite scary. So either correction has to be occurring very soon. Either we'll see a correction coming in the gold prices, or we will see the bubble of AI being a little bit too heavy, which might give a correction on the equities side. But either side, a correction is definitely due.
Vijay, what is different today than the 80s, when the gold reached around $800 and it dropped back to $300, and then it took it 20 years to go back to the $800, even in 2011, after the global financial crisis and after the sovereign debt crisis in the Europe, gold reached $2,000. It dropped after that, and it took it around 9 years to go back to these levels again. So today, do you believe that there is any convergence, any similarities between what happened in the past and is happening today?
It's very similar actually. Whenever we have seen gold take a breakout, there are 3 or 4 years of gold madness. In the 80s, when we saw it break the 300 barrier, which was a huge barrier at that point of time, we saw it climb almost 200%. In 2011, when we saw it break the 800 barrier, which was the huge barrier for 20 years, when it broke that, it almost hit 2000, went till 1980 and came back down. So that was also a 150% increase. And this time 1980, the previous high, was a big barrier. As it's broken, we have seen the craze on the upside, and we can easily see 150 to 200% move on this time also, which means that gold prices at $5,000 or $6,000 an ounce is not too difficult. At the same time, we do believe that these prices won't be long lived. There might be a few corrections on the way, but overall, after hitting a $5,000 mark, we will see a big drop on gold. And then that will become the new range for the next 10 years. It looks like gold has a longer cycle than equities and even real estate has. The longer term cycle does keep inflation in check around the world. At the same time, because the inflation barrier has been so big in this cycle, that's why the gold prices also have been so much higher.
Thank you, Vijay Valecha, Chief Investment Officer at Century Financial.
Thank you so much.
Thank you.